Gold is trading down again today, almost $100 below its record high of $1,227.50 an ounce hit on December the 3rd. Joining us now for a look at where gold may go in 2010, the world's most accurate gold forecaster, Philip Klapwijk, chairman of GFMS, a London-based research firm. He's with us from Madrid this morning. Philip, so glad you could be with us. Let's talk about gold in 2010. We've obviously seen it back off that record high by quite a bit. Do you think gold is likely to head further down?
I think in the short term we could see further correction in the gold price. If we were to see, for example, the US dollar strengthen against the euro due to concerns about sovereign ratings in Europe getting greater, well, that could, for example, lead us to break through 1070, 1080, maybe get all the way down to 1030, and who knows, possibly even dip temporarily below $1,000 per ounce. Certainly, I don't think that we're on the cusp of a, shall we say, renewed rally of the likes that we saw from September through to early December.
No, okay, that may be the case, but dropping back to $1,000 an ounce would certainly wipe out some pretty handsome gains that people have enjoyed getting into gold this past year. How long do you think that may last, and how soon might it happen?
I think we could see over the next few months, assuming that we get, as I said, a bit of a pickup in the US dollar, a bit of a rebound continuing in the US dollar with optimism regarding the American economy currently ruling. There's potential certainly for a bit of a sell-off. We've got still quite large positions on the COMEX futures market, large long positions, and I wouldn't be surprised if we see some attrition in those and prices moving down. Maybe not as far as 1,000, but certainly I could see 1030 or so on the cards in the next couple of months.
Philip, gold, as you well know, unlike other commodities in that it doesn't always trade on supply and demand, at least physical supply and demand, but we did see some jewelry demand last year. We did see a lot of gold being liquidated in order to supply the market. How might those two factors play out in 2010?
Well, I think that's a very interesting observation you made, because in the first part of 2009, we saw the rally blunted by a collapse in jewellery demand and a huge increase in scrap supply to the market. And that certainly took the edge off the investor-led rally that took place at that time. In contrast, in the fourth quarter, the scrap supply did not react in anything like to the same extent, and what we're thinking now is that we need substantially higher prices for scrap supply to come back into play the way it did in the first 4 months of 2009, and that's quite a positive for the price going forward.
Philip, let's look at the futures curve for a moment, because I want to get a sense from you as to whether you buy what futures prices are building in for gold. They effectively say that even if gold does dip, as you predict, in the next several months, it will bounce back, and we might actually see gold head towards $1,300 an ounce, at least by December of 2014. Admittedly, a long way out, but the curve has an upward slope, which is to say at least futures traders think it will appreciate consistently over the next several years. Do you buy into that?
Well, you know, I actually would say that the curve is understating the extent to which gold is going to rise over the next couple of years. I'm not sure that we're still going to be in a bull market in 2014, but I think we're going to see 1,300 probably this year and not in 3 years' time.
Okay, I just want to make that clear for everybody. You think we may see a short-term correction in gold, but that futures prices may understate the potential for gains going forward. One last question for you. Central bank demand. It's been a big news story the past several months. How's that going to shape up in 2010?
I think what we're going to see is a degree of neutrality overall from the central banks this year, maybe marginal net selling, and that's really because the IMF has still got 191 tons to do. And we will see some additional selling, I think, from Europe. On the other hand, there are buyers out there, both central banks and sovereign wealth funds, and I think they will absorb a good part of that central bank selling that's going to come through the market.
All right, Philip, I'd like to thank you very much. Philip Klapwijk, the London Bullion Market Association, calls him the world's most accurate gold forecaster, says gold may drop to $1,000 an ounce in the next several months.